Folks, welcome to Best Stock Charts for the coming week. This is Bob Desmond over at the Contrarian Trader. It is Saturday, October the 13th, 2018. Okay, so what we're going to do here today is we're going to go over how we did last week. I'm going to do a little bit of a rant with regard to the management over at Google. I have an article on Zero Hedge that's been posted. And we're also going to talk about threats to the world economy, not the least of which is the inevitable turmoil that's going to ensue between Italy and the European Union. And we'll talk about the impact of that on the markets. Then we're going to do a best stock charts overview, meaning I'm going to go over the daily charts. We have a lot of stock charts to get to that are really good, high probability setups for the coming week and weeks. Then we're going to segue over and into the week ahead commentary, which is where I review the health of the overall markets with members. We'll do a deep dive into the best stock charts that we really like. We'll talk there about not just the daily charts, but the weekly charts. And I'll get into why that's so important as we begin to talk about our strategy for trading the markets as we move forward from here. And then, of course, we'll leave off with a review of our positions. And then again, more strategy. Do we plan on adding? What are our stop loss orders for those positions? So let's get to it. Before, if I could ask you to leave a comment on YouTube, give me a like, hit that subscribe button. There's a 14-day free trial offer. Half the times I forget to even mention this stuff. So please take advantage of the 14-day free trial offer. Cancel at any time. And if you're not ready yet, that's cool. Just enter your email address on the website. There's a link to it in the video description area below if you're watching this on YouTube. Or if you're watching it on the site, you'll get haunted by some pop-up to enter your email address. Our website is being rebuilt. Brand new. Prices are going up. The launch date is scheduled. The soft date is around Christmas. The hard date should be the first of the year. Prices are going up. If you're a member prior to the launch, you'll not get an increase after the launch of the website. I'm sorry, I have to charge more. I invested a lot of money into the new website. So as an investor, I need to recoup that investment. So let's get to it. The first article that I have up here is Italy declares war on Merkel and the EU. If I can remember, I'll leave a link to it in the video description area on YouTube, as well as on the blog post, but it is on Zero Hedge. Why is this important? Well, we're in a tumultuous period in the global markets, not just the U.S. markets. The U.S. markets are playing catch up with the rest of the world. But this is a serious problem. You've already had Brexit. If you have Italy threaten to leave the EU, you're going to see a surge in the U.S. dollar, a surge in gold, much as what you saw during the Brexit days when they had the referendum. And you're going to see stocks globally tank. This is not good. And I'll leave it to you to decide whether or not the Italians are right or the EU is right. I'm not going to get into the politics of it. But you have a populist government over in Italy. I happen to sympathize with them, but that really doesn't matter. What matters is the event. There is a lot of concern with regard to a blow up over in the EU. And God forbid you have Italy which decides to leave. If Italy decides to leave, that's the end of the EU. So it's not just one country leaving. It's like when you have a shirt with a thread that's hanging off of it. You know, that could have been Britain when they decided to leave. And so you pulled on that thread, and now you have the Italians pulling out of the EU. And all of a sudden, you start to come apart at the seams because you started tugging on that thread. That's the analogy I'm using for this issue that we have here, which is quite serious. Italy potentially going to war with Merkel, which is for the most part the EU, let's face it. Now, I want to talk about Google. We don't have enough time on this video for me to play clips from back in August. I had warned back then. I'll link to it at the end of this video, but I made a whole bunch of videos. I can't link to them all. I warned that if Google and the other FANG stocks and add to that Apple, if they decided to go down this path of blocking conservatives on their platforms, they were inviting a war with the president. They were inviting a DOJ investigation for antitrust, all because they had to inject their politics rather than focus on business. Now, the president has already issued an executive order to the DOJ to investigate for possible antitrust. Now you have a new headline out there, Google versus Trump. If you're on the board of Google, this is the last thing you want to see. The good censor, that's Orwellian, on collision course with the Patriot president. This is bad stuff. If you're a Google investor, let's get to the charts. Let's start this conversation. We don't need to worry about the text. We know what they're talking about here. It's all about the headline. This is bad PR. And Google does not have control of the narrative. Let's get to the chart. I was talking about Google back here, and I warned, you have a lot of topping action on this weekly chart. If we break down below this lower band of support on Google, it is all over because you had lower highs and now you would be putting in lower lows. The markets were sending signals to get out of this stock weeks ago. And I warned when you got a pullback that we would probably get a counter trend rally, much as what we did on Netflix. But that rally would probably fail. RSI was flashing signals back here on the breakdown the week of August the 13th. RSI was flashing warning flags. And I was talking about it on Best Stock Charts. I was talking about it on Swing Trading Today, which I put out in the morning. This is corporate malpractice. I love Google's products. I love YouTube, but this is corporate malpractice across the FANG stock universe. Let's take a walk down memory lane since February. Facebook, hammered. You didn't even get a double top here. Hammered. Zuckerberg, crying in front of Congress. Talk about a creepy guy. What else do we have? Netflix, invested millions in Chelsea Handler. What do you have right now? Lower highs. We haven't quite broken down yet, but I'll bet you we're going to break this 310 level. Horrible investments in left-wing content, and they lost money on it all. What else do we have? Amazon, Bezos with the Washington Post, constantly poking the U.S. president, who is not friendly to Jeff Bezos. Lower highs, we broke down last week. Guess what? We have a broken stock. It's broken support. Let's go to the annotated version here. Weekly chart. Let's update this. We broke down below the lower band of support, broken, unless we gap up next week to recapture it, but I wouldn't even be confident that it would even hold by next Friday. Big down volume. Institutions won out. A breakdown on Ultimate Oscillator. The chart's just a mess. These guys all, Google, Facebook, Amazon, Netflix, had the world by the short hairs. They decided that they were going to poke half the population and force feed a liberal agenda down their throats. And here you have the result. Amazing. All right, so how was our week last week? Well, we went into the week last week short of the semiconductor sector. We booked profits on that trade. Did we get out at the top? No, we did not. I wish we did, but I'm not going to cry about making a profit. We had been short of the S&P 500, but we booked that profit the prior week when the leveraged ETF that we were using became overbought. But we will be looking to buy them back. I'll talk about them more next week on Swing Trading Today. The positions that we had added to NUGT, we were up last week alone nearly 17.5% on this trade. So net, a very good week last week and the prior week. And I plan on adding more to the gold miners. And this is not a swing trade, folks. This is more of a longer-term play on a crisis. Whether it be debt-driven here, rate-driven here, meaning our debt is growing exponentially, And as the Federal Reserve increases rates, what happens? Well, our debt payments on that debt that we owe increases. And it sucks capital out of the economy. And they don't have money in the Treasury to go ahead and start paying cash. They have to print more dollars. Bad stuff. That means weakness for the U.S. dollar. Now, the only thing that can blunt a crash in the U.S. dollar right now is, as I just discussed, the conflict between the Italians and the EU. That would keep a bid under the dollar, which happened to be up on Friday. But oddly enough, so was gold, which I'll talk about in a moment, and NUGT, which did close down on the day, closed significantly off the lows of the session. So net, while down on the day, a very, very bullish day for NUGT. What else are we looking at? We're looking at the GDX, and that's for members who want to avoid volatility and not buy the NUGT, which is completely understandable. Now, I have been going over the chart of the GDX because it has more historical data than what does NUGT. Now, the week of September the 4th, we rallied off the lows of the week. We broke out of this downtrend the following week. Last week, we flashed a bullish engulfing of the prior day's move, and we closed significantly above resistance, as noted by these topping tails. And we also closed back above prior resistance at the 1991 level. We closed at the 1953 level, and we closed at 1975. So we have a very, very strong week technically for the GDX and NUGT. So the market is sending us signals, folks, that all is not well with the stock market, and there is money rotating out of stocks into safe haven plays, and the dollar may not be one of those safe haven plays. Now, the bond market was with yields declining last week. I got to speed this up. I have so much to go over. Gold, we closed off the highs of the week last week, but technically a very strong week. Gold broke out last week. You can't ignore this. We have an inverted head and shoulders set up and a breakout on Stokes. Left shoulder, rounding bottom. Right shoulder, here's the neckline. We broke through it. RSI broke out. We broke out a couple of weeks ago above the secondary downtrend line. Now, last week, we broke out above the primary. It's game on for gold in the miners. Does that mean you go jumping in on Monday morning, buying with reckless abandon? No. There'll be opportunities to buy the pullbacks or breakouts. Members will talk about strategy on the week ahead commentary, and I'll segue into it right after best stock charts, so stay tuned. All right, so for best stock charts, I'm going to blow through our trades that we're watching for the coming week. And let me begin this conversation off with this. Momentum trading to the long side is dead for now. The only momentum trading you should be doing is shorting into any rallies, because I do not believe that this market is done going down. Might we get a counter trend rally? Absolutely. I'm expecting it. I did some buying on Friday, but I do not think it's going to hold up. It may hold up into the first of the year, but after that, I think that all bets are off. Now, if I'm not into momentum trading to the long side, am I solely looking to short stocks? No. The other way to trade this market is buying extreme oversold stocks. Now, that sounds easy, right? It's not. So the key to profiting on extreme oversold stocks is A, identifying when a stock is at quote-unquote oversold levels, and really extreme oversold levels. 2, when do you enter the stock? How do you know that there's a probability that we're going to bounce? You need to understand where support is on a weekly, monthly, quarterly basis, because once you identify where there is historical support, you can bet that you're going to have allies, meaning other fellow traders that will be looking to buy at that support level as well. Lastly, it's knowing how much of an allocation relative to your overall portfolio you want to put on, and you do not want to go buying all at once, because just when you think the stock can't go down any lower, it goes down lower. So you need to proceed with caution, build a position incrementally, and we're going to be talking about that with members on the week ahead commentary. Again, 14-day free trial offer. Cancel at any time. So to repeat, I'm only going over the daily charts. These are just the stocks that qualify to be on our watch list. With members, I'm going to go over the weekly and, if necessary, monthly or quarterly charts to identify historical support, so we know where we have allies to help us put a bid under the shares. So let's get to it. Daily chart, ATRO, RSI 11.85. We are trading down below not just one support level, but two key support levels, and we are leaning into the third standard deviation Bollinger Band. We rallied on Friday, but that rally faded at the $33 per share level. So what do we know by this chart? Well, we know we're going to have stiff resistance at $33 per share. We need to get this at a better price because there's not enough profit to go buying these shares where we closed out the day on Friday, assuming that we open up there at the same spot on Monday. We need a little bit more downside on ATRO. We'll go over the historical support levels with members on the week ahead commentary. Members, stay tuned. The next chart up, Marcus and Millichamp, MMI. Never heard of him. RSI at 15.59, very oversold. Stokes like a coiled spring. The 50-period moving average is going to cross down below the 200-period moving average probably on Monday, Tuesday, the latest. Don't worry about this. When you have RSI trading down below 20, it's already priced in this negative divergence. I wouldn't sweat it. Now, we do have some support below here, as you can see. We're going to go to the weekly and or monthly charts to identify which is the stronger of the two, going back not just a few months. We want to go back a few years. And that will help with our risk to reward. Now, ADX red is double topping out, possible double bottom in green. I'm liking the setup here. Members, more to come on the week ahead commentary. ECPG, Encore Capital Group, RSI 12.07. We closed right at the bottom of the day, the lows of the day. Is this the bottom? Is there historical support below? We need to take a look at our historical charts. We'll do so later on in the commentary. Volume is dropping off. That's a good sign. You're not seeing as much institutional distribution here. And you also need to understand when you enter these trades, what is my catalyst? What do I have in my back pocket that gives me an edge over other traders besides knowing that the shares are extremely oversold and knowing where historical support levels are? You also need to know what's going to send the shares higher. What is your catalyst? And the catalyst could be heavy short interest, resulting in a multi-day short squeeze, or it could be cheap on a fundamental basis, making it attractive to value funds, or a mixture of both. So ECPG looking good. Members, more to come here. MEI, Methode Electronics, RSI 9.61. Very attractive. We closed right at the lows of the day. The probability of us going lower on Monday is fairly good, especially when you take a look at volume, which is rising. Now, interesting enough here is that while we put in a new lower low with rising volume, guess what MACD did? It did not put in a new lower low on histogram. It began to flatten out. That's a very good sign. Stokes, again, are like a coiled spring. Notice how I'm not talking about the Googles of the world and the FANG stocks and all this. I want stuff that's been beaten down already for months, like MEI. It's been beaten up since June. The next chart up, PETS, PetMed Express. Everybody knows this stock. RSI 16.76. Possible double bottom on Stokes. Very attractive. We did break down below support on Friday. So in all probability, we are going lower, especially when you take a look at volume, which is rising sequentially. These are funds saying we need to get out. We're rolling over on Ultimate Oscillator. There's still more pain to come here on PETS. Members, more to come on the weekend commentary. Louisiana Pacific daily chart, RSI. This is Louisiana Pacific, folks. Not a micro cap at all, right? We have 16.99 on RSI. Stokes are rolling over, a rounding top below 20. Not good. Are we at historical support? We're not sure yet. We need to pull back and take a look at the weekly and or monthly, quarterly charts. So we need to do more analysis here. The 50-day moving average has now crossed below the 200-period moving average. That's a good thing. It's in the rearview mirror. Now, what we're looking for is a new lower low and then a bullish key reversal. For those who are not members and don't know my style, and you're asking, what the hell is a bullish key reversal? This is a bullish key reversal. Picture this setup here. Picture the end of trade, March the 1st, this candlestick here being this candlestick, and then having this bullish key reversal bar on Monday. That is a sexy setup. So we rallied here, we pulled back higher low, that sets the stage for a rally. Now, what we're looking for is a similar setup. We want to see bullish key reversals, and they are going to come. There are a lot of great opportunities out there, but you need to have the cash on the sidelines to take advantage of them. I'm very excited right now about the opportunities that this market's presenting. The next chart up, tile interface. I was talking about this chart back in the spring looking for a breakout, which never came, so we took it off our watch list. Now, look at this thing. It's been decimated since April. So if you liked it then, you got to love it now. But even though we have RSI at 16.55, and as Textbook for Dummies would tell you, is, buy a stock when your RSI goes down below 30 or 20. Let's use 20 as an example of how you would have lost money by listening to stupid rules of thumb because some guy wants to get paid for a book showing that he's a huge technical analyst. When did RSI go down below 20? Let's go down memory lane. That would have been on October the 10th. That was right here. If you had gotten giddy and said, okay, it's time to buy, you'd have gotten decimated. Weak stocks tend to get weaker. Never underestimate fear as an emotion relative to greed. Fear is a far greater motivator, especially when you have margin calls. Volume continues to rise. So we'll be analyzing I believe this chart, we're going to be reviewing here, let's bring it up. The weekly chart. So members, more to come. The next chart up, FOE, Ferrocorp, daily chart, RSI 15.30. Look at all these opportunities here, folks. Huge, huge volume. Huge, huge volume. This may have been a capitulation day on Friday. Very interesting. We're leaning into the third standard deviation Bollinger Band. And this support level here at $20 per share has been very strong support several times in the past. And we're only looking at a daily chart. I can't wait to take a look at the weekly or monthly chart. Which one we'll be doing? Weekly chart. So members, stay tuned for the weekly chart. The next chart up, Catchmark Timber Trust, CTT, RSI at 11, love it. Rounding top on Stokes, below 20. We're probably going to go lower here. We close right at the lows of the day on volume. So members, more to come here on CTT. Now, none of these folks do I want to short. Not one of them do I want to short. We are looking to get long of them. The next chart up, CENT, Central Garden and Pet. This was a watch stock to the long side for us back here when we broke out of this triangle formation. Now we have RSI at 16.67, rounding top below 20 on Stokes, very bad. Volume, about average, not that bad. So CENT looking good. And remember, folks, all of these charts, the only reason why I'm looking at them is not simply because they're oversold, quote unquote oversold. I really don't like that term too much. There is a catalyst to send them higher. I'll discuss that with members along with we're going to go over a weekly chart on CENT. Rambus, Rambus is the first extreme oversold stock I ever traded. This is where I proved my theory, was with Rambus. So the probability of me trading Rambus is extremely high. RSI on Rambus, 10.85. And I remember going back to the first time I traded Rambus, I posted on a message board, a Yahoo message boards when they were around. And people thought I was nuts. I got called so many names because the chart was just so horrible. Just like this. And I said, I'm buying Rambus, not yet, but soon, using my new strategy. And we made a ton. So RSI on Rambus, 10.85. Stokes is still weak with a rounding top. I still think that we're going to go lower here. Volume above average. But I think that we are very close to the end of this sell-off on Rambus. So members, more to come. And we'll leave off with EDC. This is a leveraged ETF for emerging markets. And this would be more of an investment, as is gold, silver for us, the gold miners. Now, why do I like the EDC? It's because the dollar is breaking down and there is pressure on the Federal Reserve to pause on their rate hikes. Now, if the Federal Reserve indicates that they will punt on a December rate hike, you're going to see the dollar tank. You're going to see yields pull back. Why is that good for emerging markets? Remember that emerging markets are entirely in debt, and mostly in debt that's denominated in US dollars. So if the dollar pulls back, it's like a tax cut for them or an interest rate reduction. It just makes it easier for them to repay their debts. And if the dollar tanks, that means that these economies, which are primarily commodity based, well, they're going to sell more commodities. So it's all good for them that we see lower yields here along with a weaker US dollar. So EDC, we're watching, not ready yet, but we're watching it. If you don't want the volatility of the EDC, I completely understand. Simply trade the EEM. Now, members, what we're going to do now is we're going to segue over and into the week ahead commentary, and we're going to continue where we left off, meaning I'm going to continue with the deep dive on the charts that I just went over. Then we're going to segue into market pulse check, which is where I review the health of the overall markets, meaning all the major indexes, some of the subsectors, and then we'll segue and finish off with our positions, and I'll do an update as to where our stop losses should be placed. Again, if you're not currently a member, sign up for the 14-day free trial offer. Cancel at any time. There's no risk to you. Click a button. Fire me. And if you're not ready, enter your email address. If you watch us on the website, get these videos sent to your inbox along with Swing Trading Today. If you watch this on YouTube, please leave a comment, give me a like, share with a friend. Members, let's get to the week ahead commentary. Okay, members, welcome to the week ahead commentary. I want to kick things off with regards to Rambus. Rambus I have a special affinity towards because, again, it was my first extreme oversold trade. We made a ton off of it, and it allowed me to say, okay, we have a strategy here which allowed me to launch the Contrarian Trader. Now, I'm going to talk about strategy throughout this video, and for Rambus, I'm going to use a quarterly chart. I believe this is the only stock I'm going to be going over a quarterly chart with. And why does it matter that we pull back and we look at whether it be a weekly chart, a monthly chart, or a quarterly chart? The reason why it matters is that we know that at current, we do not have, we closed out the week last week at 9.18.